Shift4 Payments provides point-of-sale solutions that helps businesses accept payments. This company has been focusing on restaurants, hotels and stadiums and is showing strong growth across the board. At the latest price, Shift4 has a market cap of $6.8 billion. With $600 million of cash and $1.8 billion of debt, the enterprise value is about $8 billion. Revenue over the last 12 months comes to $2.7 billion with $131 million of net income and $492 million of adjusted EBITDA. CEO Jared Isaacman started Shift4 when he was 16 years old, and he's led the company to double-digit revenue growth for 25 consecutive years. More recently, Isaacman said that total payment volume grew 50% with EBITDA growing over 30%, and Shift4 recently provided guidance suggesting adjusted EBITDA will come to $658 million this year with free cash flow of $395 million. That means the stock is trading at 20 times this year's free cash flow and 12 times this year's adjusted EBITDA. That's a dirt cheap multiple when compared to growth and other companies in the space. Toast, for comparison, trades at over 50 times EBITDA. But it's worth unpacking some of Shift4's numbers. As mentioned in a short report by Blue Orca Capital, Shift4's adjusted EBITDA figure is inflated by the capitalization of a number of different expenses which are usually included in GAAP figures. Meanwhile, free cash flow is sharply lower when accounting for the cost of acquisitions. Over the last 5 years, Shift4 has spent almost $500 million buying up smaller payment businesses, including a $250 million acquisition of competitor Revel. Account for acquisition costs and free cash flow margin this year drops to under 5%. The concern is that Shift4 is buying most of its growth and not as profitable as the numbers suggest. That said, acquisition-driven growth can be a good strategy if the numbers make sense, and Shift4 has proven itself to be a strong allocator of capital over the years. In fact, Shift4 is now a desirable acquisition target in its own right. Earlier this year, the company received multiple offers, which Isaacman rejected based on price, but it's clear from his recent shareholder letter that he's still open to offers, and over the past few weeks, Isaacman has increased his position in the company, a strong indication that he thinks shares are undervalued. Overall, though, the payments industry is highly competitive, with companies like Fiserv, Toast, Lightspeed, Amadeus and Block all trying to win, and there really isn't much to differentiate these businesses. But 4's ability to take market share means it's in a good position to command a higher valuation in the months ahead, and it wouldn't be a surprise to see the stock advance. But these are my personal opinions, not financial advice, and I may buy Shift4 stock in the near future. For more investing videos and to see my personal portfolio, make sure to visit my website at 3minutebreakdowns.com. Thank you for watching.